Hey guys, welcome to another Trade Genius podcast. Bob and Phil here as always. Guys, Powell gave the markets the green light. We're going to talk about what that means and what you can expect over the next couple of weeks. Let's dive in.
Trade Genius.
So Bob, great day in the room today. I mean, look at these attaboys, right? 7K on MSTR. I mean, this isn't chump change stuff we're handing out here in these rooms, are we?
No, not just one of many that we have here today. And, it's great when a plan comes together, Phil. We've called this, we waited. Yesterday was absolutely a stop run attack. We're going to talk about why and expect more of those in the future. But I want to throw it back to you because we have some data to talk about Fed Powell Day and liquidity going into, not liquidity, but performance after Jackson Hole. So throw it to you, then you can throw it back to me for the main event.
Yeah, if you look at this Jackson Hole performance chart, you either have like really bad days, really good days, or it's kind of flat. But most of the time, 75% of the time, you have pretty good upside after a Jackson Hole. I think we're going to see the same. A lot of the sentiment that was out there in the market was that, we have a bearish engulfing candle and, watch out below. And I agree. Most of the time when you get a bearish engulfing candle, people think the next day, that's the mindset. Next day is just going to be terrible. But really, statistically, the next day is positive, but it's an inside bar. And actually, the next couple of days typically is an inside range of that candle. So what happens outside of that candle range, high and low, is kind of what dictates the next move. But I would say that at this point, if we do break out higher, that you'd be crazy to short that move, because I think now you're getting that run into the first rate cut like we talked about, which now we know we are at least getting 25 basis points on September 18th when the FOMC meets again, and possibly 50 if things deteriorate, although I don't think that's going to be the case. So most likely the outcome there is 25 basis points, and I expect everything to run up. Now, today, Jackson Hole, Bitcoin just went boom, right? It just took off. And I think what that's telling us is that's going to lead also other risk assets. But I think when the speech was done, I think the sentiment was, Powell's giving us that dovish speech. We got the green light. And now all of a sudden, the short hedging on Bitcoin is being released. The Coinbase premium spiking really hard. So you're getting some pretty solid spot buying on Bitcoin. And I think that's going to continue. And like I was telling folks in the room, I think we're starting this final move. Finally, we're going to break out of this range. We're going to go to all-time highs.
Hey everybody, it's Bob with Trade Genius. Usually I do fun ads. I talk about our service, but I want to be serious with you for a second. We've been helping a lot of people trading for a long time. As you can see here, I want to let them do the talking for me for a change. But most importantly, we want to help you too. If you've not joined our service yet, come check us out, tradelikeagenius.com. Full service. We have chat room. We have the algorithms for you. We give trades out every day. We educate you. So go to tradelikeagenius.com. Check us out. What you get out of our service is much, much more than what you put into it. And we'd like to see you in the room. Thanks for listening. Yeah, I mean, it was really interesting. So, part of the issue they have, I think, Jerome Powell, he was as clear as he's ever been. I mean, he literally said, it's time for rate cuts. There was no sugarcoating on this. We talk about the employment report being an issue, but I think there's a bigger issue too, Phil, because there's also other reports that came out the same day that the PPP fraud was so prevalent that they think there's still a couple million employees being counted in birth-death models that never ever existed, and they have to all be unwound here as government agencies try to track down all this fraud. And so I think probably they saw it and they said, hey guys, we've been way too tight for too long. Remember we said we thought July for sure would be a rate cut, and they didn't do it, and maybe would have been one. Well, if they had the correct data, or they believed the data, or weren't being controlled into not lowering interest rates, that's probably when they should have started lowering interest rates. They cause a lot of stress in the system. They're behind. But I want to talk about, why yesterday looked like the market was going to crash and why today it's ripping. And the reason being is liquidity, Phil, is absolutely at unbelievably low rates. And when you have no liquidity like this, the amount of stock action with active players gets magnified.
Right.
So you have these huge moves off of what would have been normal behavior if there was a lot more active participants in the marketplace, but they're not. So, we've had now 2 days like we've had yesterday where they absolutely obliterate the market, put in a bearish engulfing pattern. And you're absolutely true. people, and write this down, guys, if you're trying to learn how to trade, you never short into the end of the day of a bearish engulfing pattern. We can almost, unless the world is ending, can almost guarantee you that they're going to consolidate that thing inside the candle the next day. So, and like Phil said too, that it messes around in there, then it picks a side and it goes. So you have to be really careful about shorting into the hole, because the market makers, remember, this market operates on inside out traders and outside in traders. And when you have big moves like that, people are going to monetize that, or they're going to catch what I would call the last money in. They're going to make you pay for it. So expect it with liquidity is slow. I think it's another reason why they're cutting, Phil. They got to figure out how to get liquidity into this marketplace. It's out there. It's just not in the markets. And once that starts coming into the markets, this is where, we go for the double top into those extensions that we talk about. And so watch liquidity, and that's going to tell you whether or not you're going to have big moves like this. We love it because volatility is our friend, and volatility with low liquidity, you get these snap moves like we had today. I mean, we're making double, triple, quadruple percentage of option trades just because basically the spring exploded. And so I think we're going to see this now probably all the way into the Fed meeting, Phil. Low liquidity, a lot of price action. Maybe it's going to run right up into your number here, and then we're going to get a pullback for a month, and then everybody's going to have their eyes on the election. That's my view, but I'm thinking for sure until the Friday after the Labor Day weekend.
Yeah. Yep. All right, guys. Well, let us know your thoughts. Do you think we're going to follow suit and pump into that rate cut or not? Let us know your comments below, and let us know what you thought of the Jackson Hole speech, if you thought that's what the market needed or if Powell should have been more hawkish. We look forward to your comments. Thanks for watching. Please hit like and subscribe. Check out our stuff over at tradegenius.co. Thank you, Bob. We'll see you guys on the next video. Take care.
Trade Genius.